Ladies and gentlemen, welcome to the Big Tech Frenzy. People calling me late. It's still 12 o'clock, so let's go on. That being said, today is a very special day. We have macro news coming out. We have a bunch of earnings calls. So in the morning, we had Alibaba, Neo, Best Buy. After the earnings call, after the market closed, we have Dell, Zscaler, HP, Workday, Clean Spark. So it is one of those days where we're actually going to see some companies report, which is quite exciting. We love to see new earnings reports. Ends up showing us how these companies are doing, if they have customers, enterprise, consumer. It gives us a lot of data, even for other positions that might be, adjacent to those businesses. Dell, for example, gives us a lot of insight into Nvidia. Now, this ends up going to probably what is going to be the biggest topic of discussion throughout this stream. And as we watch a bunch of videos, take in a bunch of other people's insights, not just mine. If you guys are new to the channel, you guys might not know my take on, Nvidia and Google. I'm bullish on both of them. However, by far the largest position in my portfolio is Nvidia, and that remains today. Okay. I remain extremely bullish. We're going to talk about some of the differences of what Google is offering versus what Nvidia is offering, my stance on the whole thing, and if it's worth, potentially selling Nvidia. Here's the thing. It's funny, right? You have two comments here. One that says, should I sell Nvidia? And then the one literally beneath it says, I bought more Nvidia today. At the end of the day, Nvidia's share price is one thing. What we have to look to is the actual earnings results and what they are saying going forward. Obviously, you need to look a little bit forward sometimes and say, okay, management is saying one thing, but is the market saying something else? Is there a potential that Nvidia says, hey, you know what, we're going to hold up great market share, but then a bunch of other customers, maybe like Meta, are setting up deals with Google TPUs and are going to reduce their reliance on Nvidia? Now, one thing's for sure, ASICs custom silicon, okay, this is not new. This has been around a long time. Even Google's TPUs have been around a very long time. Now they're starting to push into very good, like Ironwood's a very good competitor to Nvidia. And there's some people saying that, you know what, in certain aspects of artificial intelligence, it's actually more useful to use some of these application-specific chips rather than just GPU from Nvidia. Now, let's go ahead and read through some thoughts, because I think Bernstein ended up writing a pretty good statement on this, and I wanted to read through this. By the way, let me put up the stock price on Nvidia, which is now down 4.2% on the day. At one point was down 6.7%, down to 169.55. Just incredible. GPUs are clearly not going anywhere. This is what Bernstein had said about the Google TPU news. Right now, the overarching theme is that compute is the scarcity. And if anything, this Google deal feels more like an effort to secure more compute. We note that others like OpenAI are taking similar diversified approaches, something that has not shown to slow Nvidia down in the slightest, given the state of compute demand, with the companies recently indicating hundreds of billions of dollars of revenue visibility going forward. With numbers like that likely continuing to have solid upward biases. A roadmap that suggests that Nvidia is making even more, and to the end, I'll rephrase this because it's written a little weirdly, but they essentially said, many people are thinking that the question is ASIC versus GPU, which kind of misses the point. Right now, the real question is there an opportunity ahead of us that is still big, or is it not? They went on to say in this report that, if anything, this news from Google is incrementally negative to AMD's narrative, as the company has built their story around being the viable second source to Nvidia and hitched their wagon to OpenAI's horse. In a world where Gemini is hypothetically dominating over ChatGPT, and TPUs prove to be a viable second source for a broader swath of AI customers, investors will be eager to underwrite AMD's targets to 2030 a different way. I mean, that could be true. I think that this is, completely a nail on the head, though, in the sake that AMD is, Nvidia is just, until I see any real slowdown, any real fundamental change, there is nothing to believe that customers are changing their plans. The only thing is that some of these new deals happen to be additive to their overall compute plans, that they're buying additional chips on top of what they're already buying with Nvidia. And by the way, like, we don't even know if these customers, which ASICs for the most part have been more designs than actually coming to scale, that if they will actually be able to deliver on massive data centers at that size and scale, for custom silicon. Like, we really haven't seen it done outside of Amazon with Trainium, and even then you're seeing like Anthropic, that the entire data center was built around, had just recently started a partnership with Nvidia to get even more demand and actually start a partnership, and Nvidia took equity in Anthropic. So I'm not seeing any real slowdown or anything along these lines that's going to state that Nvidia is at risk in their moat. This could be beneficial for Google, could be beneficial for Broadcom, but I think it just goes to show you that everyone was wrong about the total size of artificial intelligence, not on who the actual winner is. Okay, that I think is really important. Let's go ahead and take a look at a little CNBC coverage really quickly on what this potentially means for Google. No sound? No sound. Okay. Cool. So silly.
We'll start with the AI trade. Another move higher for Alphabet, and reports of a massive chip deal with Meta. Deirdre Bosa has it all in today's Tech Check, which leads us off as we're glued to this move, Deirdre.
Yeah, so Sarah, here's why this deal matters. It's because Meta is one of the biggest GPU buyers in the world. So if it is exploring billions of dollars worth of TPUs, Google's custom chips, that is technical validation. It's also a major win for Google Cloud because Meta would have to run every TPU inside of Google Cloud. So not just a chip win, it's new revenue, long-term lock-in for GCP, an AI native advantage that Amazon AWS and Microsoft Azure, the other hyperscalers, do not have. Now, this absolutely powers the Google bull story. TPUs give Google real efficiency gains. And remember, too, that Anthropic has already committed to expand its usage of TPUs. However, the narrative that TPUs are about to overtake Nvidia across the enterprise, that's where investors want to be careful. I spoke with Aaron Jin, CEO and co-founder of HydraHost. It's a startup that runs large-scale AI workloads for startups and enterprises. This was his point, which is extremely relevant.
Does an enterprise want a fully integrated solution, or do they want a modular solution? I think that's really the question, because Google would be a fully vertically solution, because the only way you use TPUs is through Google Cloud. And versus Nvidia is a horizontal solution. It works out of the box. It's a horizontal product. And I think enterprises drawn to the modular.
So for most enterprises, committing to Google's full vertical stack, that is a tough sell. If they want optionality to be able to plug into Nvidia or AMD or whatever comes next, being locked into a single cloud is not exactly the right play. And in AI, of course, that leaderboard, it changes extremely fast. Narratives, as we have seen over and over again, they can swing harder than the fundamentals. Just Google itself went from broken to beloved in a matter of months, though the business hasn't changed all that dramatically. They've been working on TPUs for over a decade. By the way, guys, you can already see this next turn. Silicon Valley has moved onto Anthropic's new model, Claude Opus 4.5. just days after the Gemini release. Anthropic says that that model beat Google on several benchmarks. So guys, another sort of signal of how quickly this market can turn. Google is on top right now. We shouldn't get too comfortable here.
Yeah, I mean, even that is some choice words. I think that is sort of an important state of AI right now, is like you can take a look at the best model based on certain benchmarks, and what you would end up seeing is that Grok has led the field, OpenAI has led the field, Gemini has led the field, Claude has led the field. And they're just constantly seeing these leapfrog events. And I think that what you're honestly going to see, similar with the TPUs and Google versus Nvidia to some extent, is this is being compared to, one, a customer that is completely selling out of cloud GPUs. So they don't have enough chips and resources to sell to these other customers. It's not that there is, a general, want for an additional service that Nvidia is not offering. It's just that, hey, if they're completely sold out and we want to continue growing, we need to find some additional suppliers. Okay, so there is that diversified approach. However, that's also not taking into account the benchmarks that Nvidia has versus where we will be, whenever Vera Rubin comes out, whenever Vera Rubin Ultra, Vera Feynman Ultra. So remember that the roadmap of continuous huge leapfrogs in performance is still in Nvidia's roadmap. It's not like Blackwell is the final state and, okay, this is where we're going with all future data centers. I have an unbelievable confidence in Jensen and Nvidia. So to that extent, there should be some level of skepticism and bias from my state. However, until anyone can see anything in the numbers, many people don't have much legs to stand on right here. That said, let's switch the topic really quickly because this just recently came out just a few minutes ago. Polymarket wins CFTC approval to reopen in the United States as fully regulated prediction market platform. As a fully regulated prediction market platform. This is pretty exciting. I'm curious to see how fast companies like Robinhood end up making partnerships with Polymarket and Kalshi and have some sort of selection between both, or hopefully, some sort of interoperability if they see a difference in performance. Like that would be really interesting, right? If Robinhood could come out with a solution, Vlad, team, if anyone's listening, if there's some sort of way to find a prediction market that has the same outcome, very, very clear predictions, like which company or which team is going to win a sporting event, right? That's very binary. There's not a lot of leeway in terms of what classifies a win. That being said, there could be pricing difference in an arbitrage play, essentially, between the two predictions of a Kalshi and a Polymarket. I wonder if Robinhood can create some sort of platform that allows them to play between two of these providers if they are now available and will re-enter the United States market. I love Polymarket. W gambling. Yep. Put some W's in the chat for gambling. No, I'm not on that train, obviously. I'm not a gambler. I don't participate in any of these markets. The only ones that I think I would be interested in playing are, the stock-related ones. I feel like I have an information advantage amongst a lot of retail investors in names that I've heavily invested or heavily researched, like SoFi, for example, which we'll talk about next. Stock, by the way, is running up 1%. But Polymarket has recently introduced a thing that says, a binary prediction that says, is a company going to beat earnings, yes or no? And I remember whenever that originally came out for SoFi last quarter, and whenever I took the first look at it, it was a 70% chance that they were going to beat earnings, which means, I could almost make 40, 50% on my money going from 70 to 100. And, I think that that's pretty interesting because, like, how do I sort of state this? SoFi has never missed earnings since they've been a public company. I've got I follow the downloads of the company, the new products that are coming out. I try to follow if people are actually using it, their monthly active users, all of these different things that you can find on SimilarWeb or Sensor Tower data or something like this. And it seemed like Q3 was going to be a blowout quarter, and it was. However, the difference in the stock price, like the stock seemed to think that they were going to triple beat. However, the actual, like it ran up to like $32 or something during earnings. But the actual Polymarket results said, there's a 30% chance that they don't beat. And by the way, the EPS target on that thing was 8 cents. And by the time earnings actually came up, they had readjusted earnings to 9 cents, and then they came in at 11 regardless. So it cleared the floor with, a lot of those predictions. But SoFi up 1% on the day. Let's do a little quick round out to see where the stocks are today. AMD being the biggest loser on my watch list, down 7.3%. SMR down 6.6%. The VIX also down 6%. Circle down 5%. Nvidia down 4.4% to 174. I mean, I like it here a lot better than I did whenever it was sub 170. That was getting a little crazy. I mean, honestly, let's get real with ourselves. I think that it's a harder to understand market. It's quickly changing. People are very fearful of that. But then whenever you look at the actual price of this business, I don't know. Even let's compare this company on an EV basis to free cash flow. Very hard to play with any of the numbers in free cash flow to try to artificially inflate free cash flow. Nvidia does insane numbers there. They're probably going to be one of the most profitable businesses in the entire world in the next, couple of quarters, while still growing at 60+% rates and accelerating into next quarter. Let's get a grip with what's actually happening here. Nebius is up. Is that what you just said? No, down 2%, but recovering from 84.72, which I don't even know how they're, going down on that news at all. Nebius is its own cloud. They will be able to decide which chips that they want to put into their own data centers, right? And they're going to put in whatever chip that their customers are asking for, which is Nvidia right now. Like in that video that we just watched, they are agnostic to the cloud. So, whether you're using GCP or Azure or AWS, the NVIDIA chips go across all platforms. So that is quite exciting as well. Okay, let's take a look really quickly at Meta stock. Meta up 2.6%. You know what's so funny? They're up on the news that they're spending more on even more chips. Like the CapEx, the premium should not be given, in my opinion, to, they're saving money on buying a chip that does not have as high of a take rate. As Jensen said, the actual cost of the chip is actually pretty marginal. The total cost of ownership added all together. What's the price that you're buying these chips? What's the price that it actually takes to buy the shell and the land and everything like this to set up the data centers? What's the cost of the power? Okay. Which chip has the lowest total cost of ownership? Currently, that's the Blackwell Ultras. And I think that the market is not giving that enough credibility. I do still think Meta's an amazing buy here. I've been accumulating Meta. I've been holding on to my Google. I've been starting to buy in on Amazon again. I think that the Mag 7 names is still the best purchase in the markets. They're extremely high margins, fast pace to innovate and change their products and adapt. Just the way that we are in the regulation for artificial intelligence right now, Trump and the administration really wants Nvidia to win, or United States tech to win, which ends up benefiting Nvidia and AWS and Google Cloud with Gemini and all of these different services. So I still think Mag 7 is the best place for my money. For my money, I'm not suggesting that that's for someone else, but I feel really good in that trade. Let's go ahead and pivot back. There was a piece of news, which is funny because SoFi is starting to accelerate. I wanted to just point this out really quick. They ended up getting a price decrease from Truist from $31 down to $28. Now, I think the reasoning was kind of funny. The firm is lowering its estimates for revenue and earnings in Q4 2026, meaning the firm meaning Truist, not SoFi. In 2027 on expectation of a slowdown due to tougher comps as SoFi is beginning to lap some of its outsized growth in their loan platform business. So wait, whenever you set the price for like think about how nutty that is. Whenever you set the price of $31, did you not know that they had strong comps? And then those comps were actually beating what they expected in Q3. So the most recent quarter was more bullish than before. So they had to adjust, forward guidance even higher because that's what SoFi had called for. But then because they previously have done well, which, by the way, every quarter has done better than before. So it's not like we have one quarter that's some sort of spike that's going to be a hard comp. No, we went from 1 billion to 1.1 billion to 1.4 billion to 2.4 billion to 3.4 billion or something like that, So, what's the problem here? It's just crazy the way that some of these institutions think. They're just price following. They see, the stock come down a little bit, and so then they have to end up following these prices. It's nuts. Honestly, what I realized about Wall Street, and this is not some new thing. This is not new to me. This is general knowledge, I would say, at this point. But you don't lose your job in Wall Street by following consensus. If you say what everyone else says and the market collapses, you can't fire every single analyst, so you're fine. But if you make some outlandish call, like imagine if Burry was an analyst, and the chip markets, Palantir continues to do well, Nvidia continues to do well, and he says, "Hey, this is the end of the AI trade," that guy gets fired. So you can't divvy out of the norm because then those people are on the shooting range. So they all end up just following price predictions. And the good ones who have come out of the way and said, hey, you know what, we're actually going to make a bullish stance here while the market is actually being very bearish. That's how the Tom Lees are found and the Devin Ryans of the world and the exceptional, analysts that are actually doing the due diligence, not the followers. So sorry to Truist, but it really does feel like price following rather than any sort of real due diligence here. Let me drop the chat really quick. Fed rate cuts. This is also bringing up SoFi stock. What we ended up seeing is that the chance of a rate cut is now at 85%, up from 30% last week. So we went from essentially 100% a month ago. 2 weeks ago, we had, or maybe it was 3 weeks ago, Jerome Powell said, hey, December rate cut is not a foregone conclusion. Okay, so everyone drew back their expectations. That dropped the chance of a rate cut down to 60% from 100. Then Hammock, not Fed Williams, but Governor Williams ended up saying that, the chance of a rate cut is really low. And they're actually saying that we need to probably stand still for a minute. That ended up dropping us down to 30%. And now here we are ended up seeing a reversion back, as many people think that we do need a rate cut. And we're seeing ADP payroll revisions end up coming in, massive amounts of new job downturns than what we saw previously. I think per week basis, we were seeing something like 3,500. Wait, let me bring up the exact report so I'm not, just spitballing here. U.S. private payrolls fell by an average of 13,500 per week in the last 4 weeks, ending in November 8th. That's up from negative 2,500 per week in the past period. So we're seeing a massive acceleration of slowdown in new private payrolls. Acceleration of a slowdown. That's one way to say it, Tanner. But yeah, big change there. I think that a Fed cut is needed. Now we're starting to see this rate climb back up to 85%. We'll see what ends up happening. Okay. Okay, let's see some additional commentary on the AI race as it stands, and get another clip here to see other people's opinions of the market. Bear with me.
Joining us now, XIA, CEO of AI consulting firm Malo Santo, also a former global strategy lead for responsible innovation at Google. First of all, just let me get your take on Gemini 3, which seems to have certainly captured the imagination of many investors and performed quite well on all those benchmarks that all you AI people do to sort of get a sense for that latest model. What are your thoughts?
Yeah, 100%. So I will say, first of all, that Gemini was state of the art up until last night. In the AI race, we are seeing models go ahead within 48 hours where they're taking over each other. And last night, Claude Opus 4.5 was just released, which actually outperforms Gemini 3 on benchmarks. Now, Gemini 3 was such a huge release because it made massive leaps in its ability to do coding and its ability to do reasoning. Massive leaps, like over 10% on some of the benchmarks in ways that we did not think we were going to see for quite a while. And last night, Claude Opus just leapfrogged Gemini on that as well. And so what we're seeing here fundamentally in the AI race, at least amongst American companies, is that we're moving away from the race being just about raw intelligence of models. What we're seeing these companies do is start to optimize their AI models for agentic use, meaning that they are optimizing their large language models to be able to be used inside of different systems to be able to go execute tasks on behalf of a human. And so because of that, we're not seeing as many of the flashy headlines like, hey, the AI is smarter than a doctor. What we're seeing is, hey, this AI is able to build an app on its own much more efficiently than the previous iteration of this AI model. And so we're seeing across the board, from the technology itself to the way that competition is playing out, a shift away from, once again, raw intelligence into this idea of AI-powered ecosystems to determine who the winner will be.
Yeah, and that may have been what captured so many people's, again, imagination with Gemini 3, looking at that agentic use and the potential for its use in the enterprise. Because, of course, as we discuss ad nauseum here, it's all about what is the return going to be for all of the spending that's taken place. So was this a leap in terms of how you could view the use of these tools in the enterprise, potentially replacing people, but certainly introducing real efficiencies and productivity?
Yes, 100%. I think that these agentic systems that are coming out now are still very nascent. They're still very new. These agentic systems, as they're being built, are now going out into different modes, or how do I say this? They're going out into different verticals and being able to do specific tasks there. So while you might have one, let's say, coding agent, that coding agent deployed in a scientific environment is going to look very different than when it's deployed inside of a web development environment, right? And so being able to generalize across those, which is what effectively Gemini 3 did against the SWE benchmark, the software engineering benchmark, is it made a model that was so good that it could be applied across all of these different contexts to bring applications to life in domain. And so the fact that Claude Opus, just a week and a half later, has jumped that, speaks volumes to where we're actually headed with artificial intelligence. Now, I think on the workflow side, in terms of, are we replacing workers? What's this mean for the workforce, and how's this going to impact labor moving forward? We see a lot of harrowing news reports coming out saying things like 20 to 25% of new grads are not going to be able to get jobs. We also see things like the MIT study that says, hey, we're failing at enterprise adoption of AI, or there isn't much ROI there. I think what we're actually in is in a shift of the way that work looks, where it's going to move away from one individual executing a series of tasks on their own to an individual organic human being augmented by a team of synthetic humans, or what we're calling agents, to be able to execute tasks on their behalf so that they can get more work done within a smaller span of time. And I think everyone's agents will be more customized to themselves. So your agent for sending email, for example, will be very different than my agent for sending email. Your agent for completing tasks or coding will be very different than the way my coding agent looks. And I think that's the future where we're headed to more immediately, where you're going to see like that old age adage where it's not going to be a person that replaces, or AI that replaces you. It's going to be a person using AI. I think this is the context where we start to see that come to life, where it's going to be a person with a team of agents making things fully automated.
By the way, I'm a very big believer in that. I think that there's going to be a ton of AI-enabled human jobs. Okay, we even just saw it from Nebius. Actually, just put out this new. I don't remember the name of it. Telcom? No. Someone will tell me in the chat. Tendum? Maybe it's Tendum. Which is an AI agent that is also using humans to verify, what the question that you're actually asking. So, AI agents for most of the research, but then verification, trust but verify, sort of thing. That might create a whole new list of jobs that didn't exist before. So we will see. A payment company is running. Oh, that's MD is definitely talking about Shift 4 there. Let's take a look. Oh, shush. You must be talking about a different one. That's not. PayPal up 2%. Maybe you're talking about that, but 6184. I mean, come on. Let's let's ask for a little bit more here before we start talking about which names are actually running. So essentially, we'll be working for robots one day. I mean, do you care who you're working for if you get a salary? I'm sure there's a lot of people here that don't even know the name of the CEO of the business that they work for. Not everyone works at a startup company, Okay. Let's quickly, I want to see if I can get a guest on. Matt Money, if he can end up joining the stream. I'm going to send him an invite, Matt, if you're in chat. I'm going to send it to you over X, okay? See if Matt can join, because he does follow Google, Meta, Nvidia, a lot of these names quite closely, and I'd love to hear from an amazing investor like himself. Geez, I cannot talk today. Some days I'm muy bueno. Other days, nothing. Matt, can you hear me? You got volume? No, I don't have you. Nothing.
What about this?
Oh, yeah.
Okay, hold on for a sec. What about now?
I got you.
All right, I got you now. Okay. Sorry, I don't normally use this headset in my ears, so different one, but appreciate you having me on, brother.
Yeah.
It's happenstance that I had the day, half day off, and saw the great opportunity come on, and appreciate you having me.
No, thanks for coming on.
Yeah.
A lot of news today, man. A lot of news. How are you feeling about this Google Meta partnership with TPUs versus what that means for the Nvidia trade?
I mean, I think that there's always been space for multiple players in the hardware space, and so it's nice to kind of see a little bit more competition. Obviously, it's going to put a potential headwind against Nvidia, but I think everyone's going to do well. I'm glad to see Google really start to come around and get more recognition for everything that they're doing. I mean, they're the tech conglomerate that I always thought they were. And I was always kind of curious, and Chris Patel talked about this quite some time ago about them creating their own TPUs and things like that. And I was always kind of surprised that they were using them kind of internally, but never really utilizing them in other spaces. So it's nice to see them really start to branch out and potentially realize some of this opportunity that really has been monopolized by Nvidia for the majority of the past couple of years. So anyway,
There were some claims that said that potentially, TPUs or Google could take essentially 10% of Nvidia's revenue. Do you see that as ever being the case, or that the TPU market will be as big as, let's say, 10% of Nvidia's GPU revenue?
man, I'd probably have to get back to you on that one. I'm not as well educated. I mean, GPU versus TPU, that's over my head. I mean, all I know is how to turn right and get oil out of the ground. So, um, but yeah, that's an interesting question. I'll have to get back to you on that one. I don't know, 10%. I mean, That's pretty significant. I mean, especially at the margins that Nvidia is seeing. If Google's able to realize comparable margins, then it'll only help them. And I think that, yeah, I mean, Google's been massively getting some good tailwinds because of their GCP platform, Google Cloud Platform, and if they're able to continue to find other revenue streams like the TPUs, who knows what's going to happen? I mean, it's already a well-established business. It's obviously shown up well in the stock price. Who knows? I mean, I was always factoring in. I wasn't really factoring in when I was looking at Google the potential market cap of looking at hardware. I mean, I've always had Android in the back of my mind, but never really TPUs. And when I was looking at this long term, I mean, I have Google in one of my top 5 positions as a holding, and I was thinking out long term. You know, what am I thinking in the next 10 years? $8 trillion, $9 trillion market cap, and I haven't really given much thought to how much the TPUs could add in terms of tailwind. And it might be more of a short term opportunity to get some profits, but maybe it has that long term opportunity as well. I mean, the need for these chips isn't going away, so I need to go back to the drawing board.
Google, though, honestly, you were one of the earlier names, at least online, that I was following on Google. We did not see eye to eye at $90 or so. I was sort of anti-Google, thinking ChatGPT was going to eat the market. But no, Sundar clutched it out. So honestly, take a victory lap there. But how much higher are they going? Are you still a large shareholder here? Is there some trimming happening? Are you doubling down?
No, I'm so appreciate the compliments, but I am. I mean, compared to a lot of people, a late investor in Google, and I really wish that I had invested pre-pandemic. I mean, it was kind of, the writing was on the wall with respect to how much opportunity they had, and I think it was just how I invested back in the day. I was very much a dividend-focused investor, value investor, and I just didn't see the long-term potential. But in terms of trimming the company, no. I mean, I these are one of those companies that I want to hold unless something fundamentally changes within the organization, and their purpose of what they're doing is changing. I plan on holding this as a staple in the long term. I'm more of I could borrow against this if I need it to do anything versus a sell if I need anything. Now, if it went to an $8 trillion market cap today, I'd probably give me a reason to sell. But for me, I'm not sure what the market cap is today, but it's got a lot of life left in it. And for me, it's something like putting money into a savings account at this point. I mean, it's tried and true, and it's really going to be able to pay you dividends, literally and figuratively, if you think about the market cap growth as well over the next 10 years. I don't see myself getting out of it.
We're at about a $3.9 trillion market cap on Google. Do you think that, maybe the search bear case of LLMs and everything taking away, that still might be there in the background, and that maybe people are calling Google's win a little too early?
I could see that. I mean, would I be running out and buying it here at 330? Probably not. I mean, my cost basis is like 113 or something like that. So it's tough. I mean, I really have to dig down and think about this. You're asking good questions here, Tanner. Questions that I really need to think about, because I mean, I'm still sitting here thinking that Google's kind of like undervalued, but it's run. I mean, we're talking, I think my position's up like 170 something percent or something like that. So I need to look at it. Maybe I do need to be trimming. I don't know. Maybe I need to be putting that money into Amazon. But at the same time, I never really gave thought to the profit generation that TPUs could have. So that could be hey, maybe instead of $8 to $9 trillion market cap, I really need to be thinking north of that in the next 10 years. But yeah, I don't know.
That would be crazy. Like a new revenue line on Google that not many investors had foreseen. Like, I
did not think about it. I didn't.
No.
I mean,
thinking the hardware line, you're thinking like, Chromebooks and Pixels.
Yep. 100%. And I wasn't really I was thinking, oh, they're making TPUs for themselves, not, hey, they're going to start selling them to Meta. Hey, they're going to start selling them to. So yeah, it's a completely and what it could grow to. I mean, could it grow to 200, 300 billion on its own in terms of revenue? And then if you think about the margins on that, I mean, and then add a multiple of say 15 to 20x, it could be $1 trillion business on its own. So I don't know. It's really tough to say.
It is interesting, right? Like a couple more deals. Obviously, we have the Anthropic ones. We have Meta, but if OpenAI ends up, somehow discussing with Google, who knows if they'd want to do that? But we've seen some weirder things in the market in terms of Apple tapping Google to help them with Siri. I mean, who knows what's going to happen into the future? I think honestly, compute is at such a high demand right now that essentially probably any of these companies are going to be a good pick just because there's that much demand. Even a company like AMD. No, I'm kidding. No, I like Lisa Su. I like AMD.
I'm curious on your thoughts. I mean, did you foresee another, I guess, competitor kind of coming into the market? I know you're a long-term Nvidia shareholder. You're obviously not hurting too much on this, but I mean, does this give you kind of pause to say, "Oh crap, I thought I had a little bit more time before somebody else entered the market, and now here it is." I mean, I don't think you're wholesaling your position here, but
I don't even think
thoughts?
that they have entered the like we're talking about an unknown size deal for like 2027. It's an article of a rumor. Like it's just crazy what this has done to the stock. Like we're selling off hundreds of billions of dollars on something that's happening way out into the future. And by the time that we get there, in order to buy those TPUs, we're going to be on like Vera Rubin Ultra going into Vera Feynman chips. Like this might end up falling through 100%. So I think it's so overblown. That's my honest opinion.
I think you got 18 months to 24 months. I mean, it's a cyclical business. I think you got 18 months to 24 months. You have to give time for some of these data centers to really come into their own and generate a lot of capital. So I think right now you might see a slowdown in CapEx because obviously you're not going to be growing at 40, 50% per annum in terms of the amount of net income that's going to be generated from these companies. So
can I clarify that real quick? Do you mean a shrinking in CapEx or a deceleration of the growth?
Deceleration. Yeah, I would find it hard to believe that you'd have a massive cut anywhere. But I think you're going to see a deceleration as we wait for some of these data center revenues to really start to show up. I mean, I'm not one of those bears that says like, "Oh my God, everyone's going to cut CapEx," but I'm one of those people that thinks that you have to invest. You have to invest at the pace that you are because if you don't, you're going to be left behind. But I struggle to see that everyone's going to be able to get the margins that they think, and I think there's going to be a surprise associated with that would cause deceleration. And not because it's not a good investment. I think it is. I think there's just going to be so much inflation in the industry of trying to buy all these chips, trying to get all the energy. And when you have so much demand, it's only going to inevitably grow the cost of supply. And so to me, I think that there's going to be some sort of normalization. Whether that means you're going to see things fall off a cliff, I don't think so. I think you're just going to see things normalize a bit. And that might mean retracement. But at the same time, I still think that there's a large opportunity for companies like Nvidia in the next 18 to 24 months.
Nvidia actually posted on X really quick. They said, "We're delighted by Google's success. They've made great advances in AI, and we continue to supply to Google. Nvidia is a generation ahead of the industry. It's the only platform that runs every AI model and does it everywhere computing is done. Nvidia offers greater performance, versatility, and fragility than ASICs, which are designed for specific AI frameworks or functions." So they said, congrats, but we're not going anywhere. Pretty interesting. Honestly,
yeah, I mean, it's no, go ahead.
No, I just feel extremely confident. I'm not people are panicking. I think honestly, just the way that Nvidia is run up, everyone is just questioning that a company of this size can hold its moat. And honestly, that's a worthwhile question. but I don't feel like I've
It
seen
is.
any real concrete evidence to suggest that they are slowing down. And I don't mean slowing down in the growth rate. I mean slowing down in the market share. Like if the entire industry ends up, spending less, they're going to spend less on Nvidia too. But I'm focused on the market share and if Nvidia can hold the pace, at least for this build out, which might be 24 months, it might be 48 months, it might be even more. Who knows? But
Yeah, and I want to give people the thought process, right? As what specifically does the TPU do versus GPU? GPUs for people that are it's like very generalized. It can like the horsepower can be used for anything. Think like the PC, right? You can kind of use it for a versatile amount of different things. It's not a CPU by any means, but like it can help process a bunch of different things, whether it's machine learning or here or there. Versus the TPUs, I'm not exactly sure what they're set up for, but it's a specialized like CPU basically. And so you wouldn't use, for a prime example for people that are listening, you wouldn't use a Bitcoin miner to do what Tanner and I are doing right now. You wouldn't be able to go live or anything like that. While Bitcoin miners, which are ASICs, they're very focused on being able to deliver one set of things as very fast as possible, but it's not very versatile. And so, I know it's not necessarily a like for like kind of comparison based off of what kind of NVIDIA is talking about. But I think if you were to set up a TPU for a specialized sort of piece of compute, then it might be good. But the thing that's nice about what NVIDIA is doing is I can get an NVIDIA chip, put it into my computer, maybe not an H100 or an H200, but a 40, whatever the heck I have in here, a 4070 or something like that, and play video games. Plus, I can put together and help speed up my video processing for uploading YouTube videos, things like that. Versus a particular ASIC, like a Bitcoin miner, is only going to be able to do Bitcoin mining. You won't be able to play video games on it. You won't be able to compute any or process any video software or anything like that. So that's kind of the difference between what we're talking about. And what I don't know is specifically what those TPUs are programmed for. I assume it's some sort of very specific, rapid machine learning sort of algorithm. But what if you come up with a different algorithm? Are you going to have to modify the TPU in order for it to get it to work? Once again, I don't necessarily know 100% what the prime usage of these TPUs are.
Can I shift the conversation slightly? Just
Yeah.
because I'm watching the market a little bit. What are your thoughts on crypto, BMNR? I don't know if I know your take on these names.
I don't hate them. I'm a firm believer. So I buy Bitcoin and I buy Ethereum every paycheck that I get. Bitcoin for a long time, Ethereum more recently. But for me, I still am under the belief that we will have a crypto winter, not necessarily before. This is what Steve gives me crap for. He's like, "You said crypto winter's coming. We're seeing, crypto come back a little bit." I am still under the belief that we will have a peak before we actually go into a crypto winter. So I'm under the belief that the recent dip that we've seen is actually short lived. And so I don't necessarily know before we go into crypto winter, which I believe will be in the first or second quarter of 2026. I don't know if we'll hit some sort of all-time highs again, or if it's going to be near all-time highs. But I still am very confident that we'll have another peak, and we have some time before we get into crypto winter. But I'm in belief that we will have a crypto winter. And so for me, I'm avoiding putting a large amount of money into any sort of crypto names like BMNR. But I am a believer that it will do fine. And if and when we do hit some sort of crypto winter, I'll be buying things like BMNR, potentially things like MicroStrategy, more Bitcoin, more Ethereum, and potentially some private companies that I have potential access to if they don't go public first. And so curious to see if my theory pans out. But I'm under the belief that we'll have another peak here within the next 6 to 12 weeks, and then eventually we'll go into a crypto winter.
Yeah. No, I think that's really good. You had recently gifted me a share of a business.
Which
Rocket
one?
Lab.
Oh, there you go. I forgot about that. Yeah.
Is this a buying opportunity here? I mean, Rocket Lab has gone from, let's see, you probably know off the top of your head, 70 something, I think, to down to 42. It's a high beta name, obviously.
For sure.
What are your thoughts on Rocket Lab? I remember, just to give, in case some people don't know who Matt Money is, Matt Money came on my channel a long time ago to pitch Rocket Lab, I think at around $4. Might even have been less than that if that sounds accurate to you.
Around
But
there. Not important.
yeah. And I didn't like what I was taking a look at. I saw a company that was burning a lot of cash and didn't see the future. And Matt doubled down and tripled down and 5x down and has made a fortune betting on a pretty futuristic name. What is going on with Rocket Lab? What are your thoughts on this name? And if there's potentially after this question, what are you looking at next?
For Rocket Lab or for other names?
No, well, Rocket Lab, and then just I'll leave the floor for you to give me what else maybe people should be interested in.
Okay.
If it's still Rocket Lab, just give me the pitch on Rocket Lab. I mean,
I have a lot of things that are potential, not a lot of things, but a few things that are in the works. But it might be a Rocket Lab or it might be a complete dud. We'll see. In terms of returns, obviously they're very disparate businesses. But Rocket Lab, yeah, I mean, to me, it really, for anybody that's looking at it, it really depends on what your time horizon is, right? And to me, it was kind of a no-brainer when it was trading at $4 a share to be like, okay, this company has consistent rocket launches. They're small launches for sure, but nobody else had really figured it out. And by the time they had IPO'd, it was like 17 or 20 launches, and I think of those, like 15 or 16 had been successful. So they had a very high success rate at the time. And I was like, well, if anybody's going to make it, it's these guys. And so everyone else was trading around a comparable, if not higher, valuation, and was failing to deliver on even some of these small launches. So to me, I was like, if anybody's going to win, it's going to be these guys. And then as time get better, and they had launched over 50 rockets or whatever it was, they were still trading at less than $6 or $7. Like, this is a no-brainer to me. And it's, while the name is Rocket Lab, it's really the Thanos of the space companies, really second to none, other than maybe Blue Origin and SpaceX. And so, if you think about it, there's a lot of legacy companies, as you know. I mean, we've been in the rocket industry, the space industry in the United States here since the 30s and 40s. So almost going on 90 years. And so, not saying that a lot of the companies that Rocket Lab has now acquired are 80, 90 years old, but some of the companies that they acquired, like Solero, ASI, plenty of these other companies have been legacy companies for decades, putting things on Mars, putting things on the moon, all these different, and putting things into orbit. So they've kind of acquired this, originally just being a simple small launch company, going the SPAC route. They got $700 some million. They were to acquire a lot of these opportunities for dirt cheap, and they said, you know what, all these guys need is a little bit of fire and a little bit of space, and they'll be able to grow into massive conglomerates. And so I think what you're looking at, as well, it says Rocket Lab, 70% of the revenue is still space systems. So solar panels, reaction wheels, creating satellites for the government, for the Space Development Agency, potentially for the Golden Dome, which is to be awarded here in the next few quarters, hopefully. And so you have that coupled with
catalyst for Rocket Lab that members
potentially
are expecting.
The Golden Dome, yeah. I mean, you have the thing that's nice about the Golden Dome contract, it's potentially hundreds of billions of dollars. No single space company can handle that on their own. And so it's going to have to be chopped up. And then also you're going to have to launch these things, which kind of gets me to the next point that I wanted to talk about, which is Neutron. Nobody really has come up with a Falcon 9 competitor. We did see some positive news come out with New Glenn, with Blue Origin, but that's a very large vessel, and potentially even getting their new variant, which I'm not sure if they're going to retire the old variant or move entirely to the new variant. But the new variant is supposedly supposed to be over $100 million per launch. And so that's a very steep price tag to pay, especially if you're not going to utilize all the space. So that leaves room for things like the Falcon 9, potentially like Neutron, which is supposed to be launching here potentially the next 6 months, to really take that and continue that market share and compete against the Falcon 9, which has been a very monopolistic space. I mean, Falcon 9 is the most launched rocket in the world. I think they've landed over 500 times, something of that nature. And to me, there's a room for a second competitor in that space, which Rocket Lab will be potentially introducing in the next 6 months. And if that's the case, it's going to be fully reusable. Maybe not day one, but hopefully within the second or third launch attempt, they'll be able to land it on a barge comparable to what SpaceX is doing. And not only that, but that's the key. Like, that's not just the beginning, but just like SpaceX, Rocket Lab has noted that they really like what SpaceX's business model is. They're planning on launching their own constellation, not necessarily for internet-based or consumer-based internet, but other opportunities. And we're thinking communications, we're thinking potential data centers in space. So you hear Elon really start to talk about the future of what you're potentially looking at space, whether that's producing solar energy and rebeaming it back down to Earth, which sounds insane, but actually, if you think about it and start looking at some of the numbers, actually doesn't seem so insane. Data centers in space, not having to pay for all the cooling because you're already in space and it's really cold out there. So small things like this, where you're like, you can start to see the potential of not just having a Neutron rocket, which will produce revenue on its own, but also having that space systems business that Rocket Lab has with solar panels, a lot of other different software that they've already built. They helped, for other people that may or may not know, Firefly, the people that landed on the moon about 6 months back. Rocket Lab was the provider of their trajectory software, and I'm probably not saying that right, but the software basically that helps guide and gets them to where they need to be. So, I mean, in that respect, if Firefly would have lost potential operating control, Rocket Lab was behind the scenes at their own control center, hoping to take over and help land that on the moon. And so, a huge proponent of them getting on the moon was also Rocket Lab. So, a large component percentage of all the different things that are going into space have a Rocket Lab logo on it somewhere. And so, you have to think, where are you in terms of your investment horizon? If this is something you want to day trade, I mean, that might be a different story. But to me, I think this is potentially potentially $200 billion plus organization that is in the making. And so to me, I'm continuing to buy every paycheck. But I guess it really just goes back to what other people are potentially looking at for Rocket Lab. Sorry, it's like a 10-minute pitch, but.
No. I really appreciate it. The reason why I'm asking more is because I've been doing a lot of research on company culture and these incredible CEOs, and I've heard multiple times that they said, or people in chat have said, Tanner, if you're looking into culture, you need to look into Sir Peter Beck. And so, which does make sense. I bet the people that are working at a space company are probably not going for the paycheck. They are probably, they love the mission statement of the company, and they would do that work for a lot less payment or a lot less pay to make sure or to actually go to work and enjoy what they do and hope that the company is successful, which you probably don't see often at many businesses. But to me, whenever you have that type of culture at a business that people are rooting for the company's success, you actually do get, extraordinary gains out of the norm of what companies usually do whenever everyone is on a sort of a high trust ecosystem or a high trust organization and they're working towards a similar goal. Mm-hmm. That's the reason why.
It definitely looks like a very fruitful organization. Everyone it's very purpose led. Obviously, they want to make things better on Earth, so that's why they go to space, to potentially bring back any sort of technologies or just make things better. And they're really just enjoying it. Like I had the opportunity to go to Launch Complex 3 for their Neutron and meet Sir Peter Beck in person. I talked to him obviously with interviews and stuff several times. But I was like, dude, did you ever think? And he's like, dude, I think of it like a chocolate bar. Is almost his quote exactly. Is it's like, you kind of just get there and you don't know how much you're going to eat until you take a bite off, and then you bite a little bit more and you bite a little bit more. It's just like you're literally just trying to think about it in terms of what can I innovate next. And so they're really on the forefront, and they're really enjoying doing it. And they have one of the best CFOs, I would say, in the business as well. For people that know Broadcom, they're like an M&A machine, and they know how to just bring companies in and bolt them on and be able to get that revenue. So the CFO from Rocket Lab actually is an ex Broadcom guy, and so he's worked on literally 50 or so plus M&A, not just with Rocket Lab but with Broadcom before, and so he knows what he's doing. And I think it was strategic that they brought him on, to be like, hey, we're not going to get there just by launching rockets. We might need to actually acquire some of these companies, etc. And that's exactly what they've done. And so it's a beautiful marriage between what Sir Peter Beck and Adam Spice are doing.
Can I, if you're able to, if you're not, that's perfectly fine. Can I get your take on VG before you go?
Yeah, for sure. I was actually pulling up some numbers in the background. I know a lot of people are frustrated with Next and they're frustrated with VG, and I get that. I completely understand. I've been in this position before, so it doesn't necessarily mean it's going to work out 100% like it did for these other two companies. And obviously they're disparate and the return profiles are going to be very different. But I've been down, 20, 30% before on Rocket Lab. I've been down 20, 30% before on Palantir, and those things turned around. And it's not necessarily sometimes about the stock price and where you are in terms of it. It's really where you vision the company to go long term. If you ask me about VG and Next, those two companies combined, let me take a step back before I jump into that piece. The United States' largest export will be liquefied natural gas. And it probably already is its biggest export. And if it isn't, it will be. And we're only going to double that or maybe even triple that between now and the end of 2040. And so if you were to ask me what companies are going to lead that charge, there's really three of them. There's Cheniere Energy, there's Venture Global, and there's Next Decade. And if you were to take an opportunity to look at what profiles you have at the moment that will have the most growth potential between now and 2040, Venture Global and Next Decade will be probably your simplest ones. And so, and if you think about it, we're probably going to be exporting about 300 MTPA per year. 300 MTPA. The PA stands for per annum. So of that, about 150 to 190 of that will be from Venture Global and Next Decade. So, a large portion.
How much did you say? Sorry, I missed that.
About 150 to 190, depending on what ends up actually coming to fruition. So that's kind of my estimate. So about 50% or more will come from both Venture Global and Next Decade. And so if you're looking at a growth vector for the United States, being LNG, it just makes sense to potentially be invested in both VG and Next Decade. Now, I get where people potentially might be upset with Venture Global. I get that they have their second facility, which came online less than 12 months ago. It's almost on its 12th month now of operation, and it's done extremely beautifully. It's almost at peak export capacity right now. I think they're up to like 6 or 7 boats of export per week. It's really hitting its stride. But they're also about to start ramping up, not ramping up, but start commissioning their third facility and start putting together those trains on the third facility, which will be just as big, if not slightly bigger than the Plaquemines project, and also, which is their second project, they also are greenlighting the Plaquemines expansion project, which is going to double the capacity of Plaquemines, which is doing extremely well right now. So if you look at VG in comparison to Cheniere, which is the current leading exporter in the United States, Cheniere is worth about $45 billion. Venture Global is worth about $16 to $17 billion. But yet they, on a pretty much a comparable basis, they're exporting about the same amount of gas. So if you think about it in that perspective, the LNG or Cheniere Energy is actually doing rather okay and has done extremely well in terms of return profile. I mean, I would just expect that Venture Global would eventually be an 85 to $100 billion company as a base case, with an upside of being over a $125 billion company, just based off of what I know from what their export capacity could be. So it really is just dependent upon people's risk profiles and where they want to be. But to me, I just don't think that with the current EBITDA that Venture Global is producing, which I think they're going to make $6 or $7 billion in EBITDA this year, them being valued at $16 to $17 billion doesn't really make a lot of sense. And I think what the problem is right now, you have overlying litigation of how much is that going to hit and things like that. But to me, it's just a no-brainer. And sometimes you just have some of these companies that fall out of favor, and eventually, I believe it'll turn around.
Hey, I'm used to holding on to companies that fall out of favor. Yeah. SoFi went through it.
Yeah, no, it's a prime example.
Okay,
it didn't make sense, but you were like, I got to own it. I know what's going to happen, and all the numbers make sense. I for SoFi, it was like, it doesn't make sense for this company. It's not going to go bankrupt. It's going to be here. Am I willing to take that risk of holding it until it comes into favor? And look what it did for you.
Thank you so much, Matt. I appreciate you coming on especially such short notice. So people can check out. Sorry, I'll do it like that. People can check out your X. You also have a YouTube channel similar at Real Matt Money. Brother, thank you so much. I hope to do it again.
Thank you, man. Keep the mustache going, dude. You're changing it from Gentleman's Quarterly to Gentleman's Daily, and I like it. Or goddamn. Because goddamn, look at that mustache; it looks good.
Thank you, brother. If
I appreciate it. Sorry, I talk too much, but appreciate it. I'm just
if you have any other half days or whatever, make sure to message me and pop in. Give me some of your thoughts on the market.
Cool, man. Much appreciated. Enjoy the rest of the show.
Thanks. Bye.
Thanks all.
Bye. So, just really quick, I did want to. By the way, seriously, check out Matt's X, Real Matt Money on X. Absolutely fantastic coverage of the stocks and the markets that he follows. I wanted to pop in to hear about some of this rising unemployment concern and if we are going to see a Fed rate cut, which obviously does impact the names like SoFi that we were talking about, but then general markets. If we end up seeing lower rates, that means that companies can borrow for less. And if you can borrow for less, then you can take some more risky bets, which actually allows for higher job production, potentially higher inflation. But, it's a balancing game. Anyway, let's go on to watch this video here.
Joining us to talk more about the AI trade in the markets and the Fed, Sonali Basak is here, Chief Investment Strategist at iCapital. Congratulations on the gig, by the way.
Thank you so much.
Maybe we could start with the Fed, because we were just having a conversation about Fed odds, the Nick Timmeros piece in the journal today, maybe carving a path to at least a hawkish cut in December. Does that make sense to you guys?
It did, because if you think about the case for cutting in December, not a lot has actually changed. You look at the Fed's own expectations from the summary of economic projections, and the expectation was core PCE to be around 3.1% this year, but the unemployment rate is edging towards that 4.5% level. So that would suggest, yes, a third in the series of risk management cuts. Now, where we're less convinced is into next year. Whether you start to see more cuts heading into next year until you see a more dovish Fed, what does 25 basis points actually do? We have certainly seen the S&P 500 react more firmly to the prospect of another rate cut. But beyond that, how much more juice you get is starting to be a very relevant question.
So at iCapital, you guys are really focused on the private markets, right? And we're starting to scrutinize more what's happening in places like private credit. What are you seeing, and how correlated is it with public markets at this point?
One thing that's really important to notice here is a vintage risk. The deals that were cut during 2021 and 2022, where valuations were not that good, where the rate environment changed drastically coming out of that. We think that's going to be a very topical question going into next year, because private credit and credit largely is not a riskless proposition. That doesn't mean there won't be losses. We just think that the whole conversation over the last couple of weeks has certainly been lumped together. Is this a question of losses and defaults on the books? Is this a question of liquidity, which is a really relevant question in this market. A lot of people got into these structures thinking they were liquid and they were not, right? And in fact, they weren't even marketed as such. So we think that these are really good questions heading into next year. Certainly at the margins, you're going to see some defaults, but a lot of the market is not necessarily tied to that K-shaped economy. That's where we think you're going to see most of the pain, where you're more weighted to the lower income consumer, perhaps, certain forms of consumer credit. If you look at the most recent data, even the PPI today, for example, insurance costs and auto and home still high. And that's something worth looking out for as we look at where we're going to look for credit quality deterioration.
Yeah, I do wonder. I mean, there have been questions, obviously, about underwriting standards. Marks are always a key concern. At the same time, I mean, Apollo did a big presentation yesterday talking about Athene and how matched they are and rebutting a lot of really all those concerns that have seemingly come in the last, let's call it, couple of months in the private credit markets.
Yeah, as you guys have seen, the default rates have remained historical averages, but relatively low, between 2 and 3.5%, depending on where you look. Another thing that's happening in the market that's important is more frequent marks. Monthly marks are a welcome point in this market now. And where you'll see diversion in those marks among different managers, the aggregate credit quality is held up. I think it's those other questions around marks and liquidity that are going to be the bigger question and worth understanding.
Let's stick with the tech.
Okay. No, I do think that we absolutely need a rate cut. 85% chance currently, 15% chance of there not being a rate cut. And honestly, I think that we will settle out at some sort of rate or percent chance like that. There's always a chance that we do not get a rate cut. There were a couple times during last year where, I think there was pretty high consensus that we were going to get a cut in June, July, some of these months, even all the way back in March, and we ended up not seeing that in 2025. So there's always a chance that we do not see a rate cut, even with high probability. That being said, this time around, I do think that we will see a rate cut. Once we start seeing rate cuts, then the chance that they continue in that trend is much easier. Fear and greed, however, still sitting at 14. Previous close of 13. Very different than where we were not too long ago, but happier to be in the 14 ranges than the 5 ranges that we were at last week. So that freaking sucked. Let's go back. Reddit, by the way, I was just looking at this. Zoom obviously just showed off earnings. 2 slight beats, whatever. I mean, don't really care too much about what's going on with Zoom. Maybe a little sold off, but sold off going into earnings, leading to a 15% bump. Reddit up 8.4%. I didn't see any news on Reddit. Is this just a general, potentially large investor coming into this name? I didn't see any news on this. I'm actually a shareholder of Reddit. I bought it on earnings last quarter. I'm a big fan of these names where you end up going in into advertising and they actually own the consumer. So I'm buying Meta, I'm buying Reddit. I'm no longer a shareholder of TTD. I'm no longer a shareholder of AppLovin. I think there's too many risks there. Now, Zeta might be an interesting name that doesn't fall into that mix. Who knows? Okay. Got to do some more research into Zeta. But I feel very confident with Reddit and Facebook. Not even like I use any of those services. It's just growing user bases, highly increasing average revenue per user, especially on Reddit side. So whenever that happens, you get a mix of better margins, fast growth. There's only so many companies in the world that can sustainably put up faster growth than Nvidia, and Reddit is seemingly one of them currently. So, yeah. Stop buying PayPal. I only bought one thing of PayPal. Haven't sold it, but have not added to it. After I bought it, I thought, you know what? Would I prefer to buy this or would I prefer to just buy more Nebius? Or even like today, for example, Nvidia is so sold off. It came back a little bit, but under 170, what would I prefer in the 170 ranges for Nvidia or PayPal? I mean, like, let's get real here. Like, I would prefer more money in Nvidia than PayPal. It's really cheap, but you have to balance cheap with growth. and what have I done better with historically? Buying value names or buying growth names? I mean, just truthfully, I think some investors have skills, and you need to realize where your skills are best placed. For me, I've done well on the growth side of investing. I've not done well chasing value names as much. I've bought and sold PayPal before. I made money, but honestly, versus some of the other names that I was investing in, like SoFi and Nvidia and Shopify and all those, it just underperformed them all. Like, even after I had ran so much. Listen to George. Where's George? I don't see a comment from George, unless you're talking about something else. Am I buying BM&R here? Yes, a little bit. Yeah, I'm not going full in. Don't water your losers. Don't water your weeds. But it was not a loser for me. I bought the dip. I have not, I've not gone in down on PayPal. Okay, let's see. Do you think TTD could what? Come back? Outperform? I think that obviously that would be like chasing a sold off name once again. $39 under $19 billion market cap. This has come from, 144 essentially a year ago. Like, look at their year to date. This is a year to date chart. Down 67%. Year to date. 1 year return down 69%. Oops, where is it? So nearly 70% on TTD. I'm not a super believer in the name anymore. Jeff Green's amazing. I think he's fantastic. Love the management, love the earnings calls, but there's, at the end of the day, especially with B2B businesses, it's all about the product. There's no TTD brand. It's product and the performance. And if there's other companies that are offering a cheaper solution and putting up similar performance, like Amazon, for example, that could, be concerning to their business. SanDisk thoughts. Well, they got entered into the S&P 500. That ended up coming out. So thank you for highlighting that. We didn't end up talking about it just yet. Where was it? I know I posted it somewhere here. Yeah, the S&P 500 rebalancing is including SanDisk. So, yeah. Now, if we take a look here, Upwork is being added to the small cap 600. Yeah, I mean, is what it is. Is it SoFi? No. Do I want SoFi in the S&P 500? Yes. But hey, we'll get them next time. Okay. I wonder if we see a memory bottleneck in the future. I'm not so sure. I don't know if we've ever seen that yet. I wouldn't bank on it. It might be the case, but yeah. Tanner, stop delaying. Buy Rocket Lab. It's literally a rocket company. Yeah, I know. I just I had a hard time knowing what the needs in space were. We're all over here. We're all on Earth. Maybe there will be some defense that I just I don't know. I like businesses that have proven themselves, and the older I've gotten, the less moonshot. That's funny for a rocket company. Less moonshot bets that I've made. And then it's even harder whenever you're buying one of those names, whenever it's 10x higher than where you've seen it previously. So I've got a little bit of anchoring bias there. And I'm not sure that the company has 10x their fundamentals during that time. It's not a weird. I'm not even arguing. I'm just telling you the way that I'm. It's not even remotely an argument. I'm not arguing anything. I'm just telling you guys the way that I think sometimes. Less moonshots, then why are you in BMNR? I don't think of BMNR. I think of BM. They buy Ethereum. I don't think that that's a moonshot project. You're watching every single company in financial services bet on Ethereum. That I don't think of as a moonshot project. There's no cost to their business. There's no leverage. There's no debt. There's no chance that they go bankrupt. You know? But yeah. Okay, it is a moonshot. All right, well then I don't bet on your moonshots. I bet on my moonshots. ETH goes to 0, they are bankrupt. Yep. But I'm not seeing any, like, okay, Silicon goes to 0, Nvidia goes bankrupt. I mean, does that make it a moonshot? What are the odds of that? I think Rocket Lab will do fine. I just don't know anything about the space industry. And I know a heck of a lot more and can understand Google or Facebook easier. We've reached the bait. No. We're going to transition here. No baiting Tanner today. Okay. No, you guys are baiting me now. What's your day job, Tanner? You're watching it. Tanner, what are your thoughts on Firefly? The same thoughts that I have on Rocket Lab. Probably a little bit worse, you know? I don't follow the space industry. I don't like, yeah, no, I've just, the older I've gotten, the less of the new sort of themes that I've been able to sort of attach myself to. That's been harder for me. You know, there was a time in investing whenever a bunch of people said that, you know, 3D printing was going to be the next big thing, that I needed to bet on genomics and space and quantum and I don't know. There's been a ton of them. EV tolls, all of them. And the ones that I've really gotten a grip on is blockchain and artificial intelligence. And artificial intelligence is a really big one because it breaks down to full self-driving, to robotics, to, and I'm not like sometimes I'll say something and then people go, oh, Tanner's anti that company. No, I'm saying I'm not involved. I'm like, a bunch of people can go make a ton of money. I don't deserve a right to be in every industry. I'm going to be where I'm competent. If I can't start naming you all the constellations and, you know, I'm not a space guy. Okay. I don't care. I honestly, I see that you guys want to know the truth. A bunch of people watch these rockets go up to space. And they go, wow, isn't it crazy that we can like catch these things? Like, I find it cool, but honestly, I don't care. It's awesome. Okay. But where's the money? I want to see money. Where's my money? Geez. Okay. And now now, let's go ahead and take another look at. Hold on. I know that there was another video I wanted to catch up on, but it's not in my notes. And so I'm upset on where I put it. So I have to go re-find it. Oh, I don't remember. Okay, here it is. It was the Scott Bessent video. If you guys haven't seen this, it's definitely worth our listen here. Okay. One moment. Let me make sure I got audio.
Trump announcing that he will be visiting Beijing in April following a phone call with Chinese President Xi. The two continued their discussions on China's agreement to purchase U.S. soybeans while the U.S. lowers tariffs on China. Joining us right now with more on the U.S.-China trade latest is Treasury Secretary Scott Bessent. And Mr. Secretary, thank you very much for being with us this morning.
Good morning, Becky. Good morning, Andrew.
Why don't we start with this latest, what we're seeing right now, and what we've heard from this conversation with President Trump and President Xi. The readouts from the two countries were a little different. Obviously, the United States has a very important push on making sure that China does step up its purchases of soybeans. How is that going?
Well, first of all, Becky, to set the record straight, President Trump initiated the call 30 days after the historic meeting in Busan, South Korea, between the two leaders. They have a great relationship. And as far as the soybeans, the Chinese are right on schedule in terms of the cadence of their purchases. Over the next 3.5 years, we're going to see the 87.5 million metric tons purchased by the Chinese, minimum, and they are right on schedule.
There have been some reports coming from China where their take on this talk is a little different. At least what they emphasized in the talks was a little different. They bring up both Ukraine and the U.S. position and the Chinese position on Taiwan. What is the U.S. position on Taiwan at this point?
U.S. position on Taiwan is unchanged. And on Ukraine, President and Party Chair Xi agreed that the peace in this Ukraine conflict, they must move forward, and they agreed to work together on it.
Am I right to think that this is a truce, but maybe a little bit of an uneasy truce at this point? How secure and settled are you feeling with where we stand with China right now?
Well, we have a 1 year, what I would say, pause. And Becky, what I feel very good about is the relationship between the leaders, because when the leaders can have calls like this at the highest level, then bad things don't happen. It was the strong relationship, President Trump showing leadership that sort of calm things down between the two countries. And look, we're always going to be rivals. We're always going to be rivals. That's natural. But are there things we can do together? Yes. We have the relationship in a good place. President Trump is going to do a state visit to Beijing. Xi is going to come to the U.S. for a state visit. He'll also be in the U.S. for the G20 at Doral, and President Trump may attend the APEC summit in Shenzhen in November. So if there are 4 meetings during the year, I think that gives the relationship great stability, and stability is good for the American people and good for the world economy.
Mr. Secretary, I wanted to pivot the conversation. We've been talking all fall with you about the prospect of the president selecting a new Fed chair. And as we get close to the end of the year, I wanted to get an update as to where things perhaps stand right now.
Yep. So we're going to have the last interview in the second round today, Andrew. We got 5 very strong candidates. I'm impressed with all of them. And Andrew, I'll tell you, one of the things in terms of the criteria that I've been looking for, that I have morphed a bit on in the fall, when we started with 11 candidates, is in talking to these candidates, I realized the Fed has become this very complicated operation. It's no longer just a price setting of money. There's this very complicated calculus between the monetary policy, the balance sheet, and regulatory policy. And we've really emphasized in the interviews, what's the interplay for that calculus in terms of the best way forward for the American economy, and what is each person's point of view in terms of protecting the American people, protecting the economy, and moving forward with the dual mandate.
Can you give us a hint? We often talk about the two Kevins, Kevin Warsh and Kevin Hassett, being the front runners. Is that still the case?
Andrew, I'm still got one interview left, so I don't think it would be prudent to give any hints. And I think that there's very good chance that the president will make an announcement before Christmas. But it's his prerogative whether it's before the Christmas holidays in the New Year's. But things are moving along very well.
Mr. Secretary, last week, the president, I'm not sure if he was joking or how serious he was about it. He said he loves everything you're doing, but if you don't get the Fed to lower interest rates soon, he might fire your butt.
Well, Becky, if you were in the room, he was joking, and again, I think that we've gotten to this point where monetary policy has gotten very complicated, and it's more than just cutting rates. We've got this balance sheet, and what are we going to do with it? The Fed has taken us into a new regime, and what is called ample reserves regime, and it looks like that might be fraying a bit here in terms of whether the reserves are actually ample in the system. There are all these facilities and operations, the standing repo facility, and I think we've got to kind of simplify things. The other thing too is that when you were on with Steve Leisman, you were showing all the Fed governors and the regional bank presidents kind of like baseball cards. And I think it's time for the Fed to move back into the background, like it used to do, calm things down and work for the American people, set monetary policy on a good course. That this isn't this isn't sport, it's people's lives. And I think we just need to calm down. All these speeches by these bank presidents that are just redundant. Why don't they actually just come out and talk about the meaningful issues in the American people rather than the short-term view of the next meeting?
Well, to be fair, the Fed governors, or the presidents of the banks at least, are hearing from people in their districts, and each of them may be hearing slightly different things about where the job market lays, where inflation lays, and that's probably useful information to hear from around the country. I guess my bigger question.
Well, no. But hold on for a minute, Becky. Yeah. Is that but that's not what they're talking about. That's not what they're talking about in their district. They're talking about some macro.
Well, Susan Collins was saying she hears about inflation. She was just on last week with Steve Leisman, the Boston Fed president, and she was saying that she does hear a lot about inflation from within her district. That was kind of the part of that interview that jumped out to me the most.
Well, the other thing I'll tell you that I find very interesting is these regional presidents were supposed to be people from the district, and it was supposed to break the New York hold on the reserve banks. And we've got at least 3, maybe 4 of the reserve banks where people were hired from outside the district. They don't even live in their district. They commute back to New York. So these are New Yorkers. They going out into the country and then coming back on weekends. I'm not sure that's the way the Federal Reserve was designed.
Mr. Secretary, curious how you grapple with this question. The president, and I believe yourself, have talked about perhaps the need to lower interest rates. The president's clearly made that case. If you listen to some of these Fed governors, including Neil Kashkari and others, as they're trying to balance what appears to be an increase in unemployment, or seemingly a little bit more unemployment, against inflation fears, how do you balance that in your mind right now, given the sort of clash of those two issues?
Well, Neil Kashkari is a regional bank president, not a governor. And what I think is interesting is that the governors seem to be leaning toward cutting rates. And again, Andrew, what I go back to is we've now got this very complicated calculus, and I believe when you're looking at monetary policy, you know what happened in the past. You try to have a view of what's happening now, and then you have a view of the future. And I think that the mistake that we're seeing a lot of times is either looking in the rear view mirror. We're flying a little blind with the numbers here, but we've had 2 cuts thus far. And what do we know? That this Schumer shutdown, the longest in history, has shaved 1.5% off GDP, at least an 11 billion permanent hit. So we know the economy hasn't gotten better. So I'm not even sure what the discussion is here.
And Mr. Secretary, I had actually maybe a curveball, maybe not. It was a curveball, I think, for all of us. I was curious what your reaction was watching the meeting between the president and the mayor-elect of New York, Mamdani. We've talked about the mayor-elect, us on the air before, and some of the president's views about socialism and the like. It does seem like they were at least buddy-buddy on the issue of affordability.
Well, Andrew, I was in the room, and I think that you've got to have some admiration for a candidate who ran a campaign the way he did. It was a great campaign. He is clearly the leader of the Democratic Party now, and I think it speaks to how open-minded the president is that he invited him into the Oval. Senator Schumer never endorsed him. I don't even know if he's met with him. And President Trump wants the best for New Yorkers. I can tell you my impression of the mayor-elect is he's a young man with a lot of old ideas that have never worked. And point to one example where policies like his have led to anything other than a decline. But President Trump wants the best for the American people, and he hopes that New York will do well. It's easy to run a campaign, but the practical everyday of keeping people safe, picking up the trash, making the subways run on time, we'll see.
Secretary Bessent, affordability has certainly been the key word, particularly since those elections, not just of Mamdani, but of the Democrats who won in both New Jersey and in Virginia. And there are a lot of questions about how to get our arms around those things. Healthcare is a big issue. The ACA tax credits being a big issue too. There were reports that yesterday the president had been considering saying that he would extend the Obamacare tax subsidies at least for a year until things can get worked out. MS Now and other places are reporting that that was kind of shut down. But I wonder if you could tell us what the administration's plan is on this front, what you think the best way forward is, just in terms of trying to figure out what to do on both a short-term and a long-term basis.
Well, let's go back and just talk about affordability. On March 12th, 2024, I wrote a piece that got published, and it was on the 3 I's that were hurting the American people. It was immigration, interest rates, inflation. We can come back to it. I would add the insanity, and the insanity on the Democratic side. So we got 4 I's. This mass unfettered immigration is now under control. The border secure, which said couldn't be done. That was putting substantial downward pressure on working class wages, upward pressure on rent for working people. 2, interest rates have come down. The bond market's had its best year since 2020. So you can mark those off. And now we're working on the inflation and this insanity of the Democratic Party shutting the government down. Now we've got this brinksmanship. They wanted, we'll reopen the government if you'll talk about health care. They wouldn't, and now here we are, kind of on the eve. But I'm not involved in the conversation. I know President Trump wants working Americans to keep more of their money, cut out the insurance companies, and we'll see. He's the president of solutions, and I'm sure that we will have a solution to this.
The front page of the Wall Street Journal has an article today talking about how the economy is kind of addicted to AI spending. It points out that business investment in AI might have accounted for as much as half of the growth in the gross domestic product, adjusted for inflation in the first 6 months of the year. and questions whether if growth in that sector slows down, whether it tanks the entire economy. What's your thought on that?
Yeah, so Becky, 2 weeks ago, I was at my hometown in Charleston, South Carolina. Boeing was doing a substantial expansion of their plant for the Dreamliner, 1,000 new, great high-paying jobs. And I think next year, all the trade deals, and thanks to the tax bill, we're going to see a broadening out of the CapEx cycle. So what we are seeing is that CapEx is spreading out, and historically, CapEx always leads to more jobs. This AI build out has been tremendous. It will continue to be, and I would echo what my friend Joe Lonsdale said, that in the competition with the Chinese, this is pass fail. That if we don't maintain our AI leadership, then everything else we're doing will be put to the side. But I'm very excited about the prospects for substantial non-inflationary growth last year, because also the deregulation is going to kick in. And to go back to your question on the Fed, this is where I think we may be in a 1990s scenario, and Alan Greenspan had the ability to have a framework, be forward-looking, look at the productivity that was going on. And I think we're seeing that same kind of productivity here. So that's why I think you can have lower interest rates, higher growth, and higher productivity.
Secretary Bessent, thank you for your time.
I think that's really helpful. Yeah, a lot was covered there, so it's hard to give a summary on a 16-minute video. But great to hear from Scott Bessent there. I wanted to quickly transition to some of the news from individual companies really quick, and then Mark Newton is expected to be on Fox Business at 2 p.m. Okay, so yeah, I want to watch that live. So hopefully we can get that, and then that'll probably wrap up the show after Mark Newton is gone. I mean, aside from this Google deal with Meta, which is still, I mean, relatively a timeline, relatively a rumor. There's not too much news today, but anyway, NVIDIA's newsroom, we covered this whenever Matt was on the show, but we're delighted by Google's success. They made great advancements in AI, and we continue to supply to Google. NVIDIA is a generation ahead of the industry. It's the only platform that runs every AI model and does everything, and does it everywhere computing is done. Sorry, my mistake. NVIDIA offers greater performance, versatility, and for fungibility than ASICs, which are designed for specific AI frameworks or functions. I think that is a great way to put it. There are some people that are saying, hey, you know what? Whenever AMD comes out with a new product, you don't see NVIDIA jumping to sort of defend themselves. So why now? Why are they all of a sudden needing themselves to answer to Google? Are you sort of validating how real what they're building if you're saying, hey, you know what, NVIDIA is going to be fine, rather than just saying nothing, essentially? Okay. It just makes them look, yeah, so exactly. It just makes them look insecure. They shouldn't have done it. Maybe. NVIDIA's, they definitely have answered to DeepSeek. They've answered to Huawei whenever they put out some new Ascend chips. That all turned out to not be much, especially DeepSeek. I mean, DeepSeek R1 and some of their new products were sort of a flash in the pan, and that sort of, came and went. So, and then also like here, let's take a look at the stock since we might be breaking new day highs intraday right now. If we push onto these green candles, I mean, we are right at that point where we could be getting new intraday highs. Previously, yep, we just did. just as I was zooming out, so I didn't get a nice picture of it. Geez, I hate. Get me out of this freaking moo thing. Hopefully, I'll get a new company to actually show off these stocks. I could do Weeble. Weeble might work, but hoping for something a little better, like maybe TradingView or something. I don't know. I'll think of something. The market has just discounted all the deals. It would be crazy for Nvidia's IR not to speak up and enlighten people. I mean, yeah. Not get TradeView, but use TradingView to view these stocks in real time. Because I'm not trading on Moo or anything like this, so it'd just be to watch the markets. I think I'd like, especially for some of the faster moving names, for really high volatility, it'd be fun to watch like a per second view, so you kind of see all the changes rather than just the minute views. I think that's also kind of nice. But yeah. Okay. I did just hear my doorbell ring. Let me make sure that my girlfriend is safe in answering this door. Yeah, no, it's good. Okay. All right, Amazon package. You know what? I don't have so we were talking about moonshot bets before. The one that I also think I'd feel comfortable in betting on is drones as well. That's another thing. Like we've been talking a lot about Amazon and how they've been sort of the place to be with all of the different technological advancements. Drones is another one that Amazon would benefit greatly. Now, I'm not betting on military drone tech or something in particular. Yeah, I'm not betting on a particular name currently, but yeah. Do I live in a rough neighborhood? No, but it's there's no. It's just general me being safe because my girlfriend's a female and yeah, I'm a paranoid person, I guess. Yeah, it's Canada. Okay. Meta's the worst allocator for capital and is now a genius for choosing Google's TPUs. That's a funny way of putting it. But yeah. Your girlfriend is female? How come? No, I just mean, I care about her safety or whatever. Okay. Let's see what else is moving. Upwork. What the heck? Also, what is going on with this chart? Can you please be adaptive to the price? Like, whenever I zoom in, it's driving me nuts, man. These charts look like shit. So, excuse me. That's how mad I'm getting. I got to log off soon. I'm not in a good mood anymore. Matt came on, brightened me up, then he logged off, and then I've been missing him ever since, and now I'm miserable. Okay. Why don't I use TradingView? I'm just not a TA guy at all. So I've never really needed a reason to use it. But yeah. Okay. Yeah, sorry. Let's go through some of the news of the day. So what we ended up seeing, I spoke about SoFi ended up getting re-rated downward on their stock. Nvidia also doing quite fine over the last few days. Even the more bearish investors recently did a re-rating as early as yesterday. We saw a $275 price target, a increase from $185 to $200 price target. And the average upside on Nvidia. Maybe this will change as of today. Like we'll monitor what the analysts are going to say over time, but we're still on a 46% upside. My concern is has Google run too fast, too quick, or does Wall Street need to catch up to what's actually happening? But like multiple re-rating. Well, sorry, no, not multiple. Only one re-rating here by Gil today. $300 price, 6% down. But even all the most bullish people, even in the last month, barely upsides on Google. It is just Wall Street analysts. Like I said, they follow consensus, but now the consensus on Google is that this is the high-flying best name to be in Wall Street. So you should see some change in their price targets in the 450 ranges to sort of be in consensus now, considering the stock has run so much. At the end of the day, Google is expected to grow at 16, maybe a little bit more % growths year over year. That's if search doesn't end up losing growth. I don't think we have seen that, but I also think it's maybe too early to call that Google is not going to still face concerns from, who knows, Perplexity, ChatGPT, many of these names that end up making more and more search-like products. Perplexity actually just had a report come out. Well, not Perplexity, but some people have been reporting that the amount of downloads and usage of Perplexity has just fallen off a cliff, essentially like an 80% drawdown from where we were whenever they showed off their new Comet browser. So yeah, that's a little bit different. Nvidia's fighting its way back up. AMD not so much. I'm not bearish on AMD, but I'm just not. It's not the name that I've sort of looked into and have followed for the last 7 or 8 years. So Nvidia, I know very well. They, I don't think they're expensive. If you look at AMD and you look at their multiple, I actually think they're more expensive than Nvidia, not by market cap, but by how much revenue that they're actually bringing in, how much earnings they're actually bringing in versus what that market cap represents. I think they're more expensive than Nvidia. But yeah. Gemini is not ChatGPT. It took me about a week of switching to Google to fully realize that. Gemini has no agentic memory, while ChatGPT remembers every single thing about me, my life, my trading, and investments. It is great. People downplay the importance of long context, which Grok has none of, and how important that is for ChatGPT. I mean, it just works. Everyone likes to write that off. I think it's too early to write them off. Okay. I made AMD my entire portfolio basically 6 months ago. I mean, in the AI trade, I'm not even saying that you're going to be wrong on that. I think that, the amount of compute need going forward, you're probably going to make a killing on that. Tanner, what percentage of your portfolio is in Tesla? 0%. 0%. I do not hold Tesla right now. I would like to buy back into Tesla, but I don't want to buy back at these prices because then that means that I would sell something that I think I have high conviction on that I believe is cheaper. But I do have belief in Tesla, especially with the pay package that gives me a lot of confidence. Yeah. What is this? Okay. Look on to Ondas. Yeah, I mean, there's a lot of names that I need to look into. It's definitely on the list. Tanner, can we see your portfolio? Some people can see my portfolio. I have a masterclass at futureinvesting.pro, which gives you full updates to my portfolio. And in fact, we're actually doing an update next week that will give you just like minute to minute, like you're going to be able to see instead of just updates frequently. It'll just be a live viewing of my portfolio. So all my trades, everything, which I still do update on, but it's like more I'm just sending a message to Discord. Going forward, it's going to be completely updated. But yeah. Can we see your bank account? I need to create a different tier list for that. You can see what fast food I'm getting, what orders I'm making, the clothes that my girlfriend's buying, the furniture that we're buying. Yeah. We're going to give you everything. That's so funny. Okay. What are my buys at these levels? I'm buying Meta. I'm buying BMNR. And I've just recently started buying a little bit more of Amazon as well. But honestly, Meta right now seems like I want to stick more and more of my portfolio into the Mag 7 names. And yeah. I'm not in VG. No. In fact, I don't have any energy names right now. I think that's a hole in my portfolio. If I were to think about my portfolio as like, okay, in order to make this ship float, it has to be beating the market. That's definitely a hole that is bringing water into my ship and slowly making me go down, is the fact that I don't have cybersecurity in my portfolio. It's not actually the best performing names right now. Cybersecurity is actually not a super interesting place to be in this market, but I just think it's completely non-discretionary spend. Like, this is, whether we're in a full-on depression or we are in a AI boom, everything's green, rate cuts, zero interest rates, cybersecurity has to be paid for. And then two, I'd say energy. Those are two places that I do need more knowledge in, but it's not easy, honestly, for me to enter new segments. It is so important to not lose money in the markets. And so I'm not quick to make those types of decisions, to jump on a name thinking that the entire market is going to lead to, like, oh, you know, any name in the market's going to bring it up. I don't believe in that. But yeah. Little selling off of Zoom here, which has been the high flyer of the day. Up 12.6% rather than the 15%, starting to see a lot of red candles bringing this down. Honestly, what is doing that? Do I have like some sort of chart thing set that it's not adjusting to the... Because usually whenever I zoom out, I get to see the full day. But no, it's stretching it out like this. I have some setting that I've broken. So I have to keep clicking back in order for it to reset to look fine. What did I do wrong? I think I'm blaming Mumu too much and not blaming user error more. Yeah. That's not a whole sticking to the circle of competence. No, I agree. But in order to be an individual investor, so circle of competence, hold on. Okay. I'm now sitting on my feet. That's how you know things are about to get serious, okay? Now I'm fully stimming, okay? I'm ready to talk. Actually, well, I say that. We need to be aware that, you know, Mark Newton might be on the show soon. Come on, why isn't it working? Okay. Why can't I watch this? What's going on? Okay. I don't know if we'll be able to get this. It's not letting me open up the Fox News Making Money with Charles Payne show for some reason. Okay, we'll see. That being said, I think that circle of competence should include the understanding of markets that will do well and won't do well. And I think I have a high probability that energy will do well and that cybersecurity will do well. Those are things I'm very confident on, even though the individual names in that sector, I don't know which are going to win. Maybe I should just buy ETFs in that case. Just ride the wave of the industries in general. That's probably what I should do. Yeah. Yeah, I could do that. I could do that. Something like this. I do own Nebius. Yeah. Yeah. Big fan of Nebius. Let's go ahead and listen to Charles Payne really quick. Okay. Why isn't this working? Okay. Mark Newton is expected to show up.
Down
We'll see.
13,500. The prior report was down 2,500. Obviously, this is the kind of news that sets the stage for the rate cut, right? Everyone's now thinking, okay, these rate cuts are going to happen. And as we know, rate cuts are the ambrosia of markets. Take a look at this. As it became clearer that maybe there was a better chance, now we're at 80%. But as you saw the blue line, a chance of a rate cut go up, you saw the black line, the stock market go up. Kind of go hand in hand there. But there's also another part of this sort of rally equation, and that's the animal spirits. To a degree, at least for the craziest bets, put it this way, they've begun to fade somewhat, right? These are your leveraged and inverse ETFs. Bunch of money piled into both of these huge, whether it's for the NASDAQ or for the New York stocks, S&P rather, both are down a lot. Many people think this is actually sanity coming back into the market. Meanwhile, investors and consumer sentiment, they continue to retreat, folks. We got consumer sentiment out at 10 o'clock from the conference board, plunged big time, 88.7. The prior number was almost 96. And both present situation and expectations moving sharply lower. Now, for all of the attention on soft or hard data, my first guest says it's all about earnings. And on that front, corporate America keeps crushing it. Joining me now, I want to bring in BNY Wealth Chief Investment Officer, Sinead Colton-Grant. Sinead, let's talk about this. Earnings were phenomenal. This was an absolutely mind-boggling, great earnings season. Not just earnings, but also revenue. And what's interesting, this is a chart here. Not just the Mag 7, which had obviously been carrying the day, but the light green is the 493. They outperformed big time. What does this tell you, though, about what kind of momentum should this provide or tailwind should this provide for the market?
Well, and Charles, this is exactly what we've been looking for. So while we're favorable on tech, we want to see the rest of the market coming to the party as well. So earnings have been a lot stronger. It's because economic growth has been stronger. We think it's going to be in the around 1.8% or so for the full year. But it's also telling us that, the consumer in aggregate is still spending, although it's not all consumers.
Right. I'm going to get to the consumer in a moment, but I do think, you look at this table and just, what is it about these?
Really quick, guys. Trump is considering firing FBI Director Kash Patel, according to MSNBC. Interesting. Let's head back.
I mean, look, you're talking about efficiency, you're talking about innovation, all of the things that we expect will continue to lead to earnings expansion. And let's not forget, you can see that on the chart very briefly.
Right.
The fourth straight quarter of earnings expansion. You don't get to see that very often.
It's really impressive. All right, you talked about the consumer. We did get retail sales in today. They came in less than expected. The control number was a negative number, but you say there are other things to look at. For instance, the Red Book, the Johnson Red Book. When I started on this street, everyone talked about this. Not as much anymore, but it's pretty solid. But to your point also, the consumer being somewhat cautious. We see in the last week, there have been distinct winners and distinct, let's call them losers. In the last 5 days, Abercrombie.
Did I say Chris Patel? I meant Kash Patel. Did I say Chris Patel? If I say Chris Patel, that's hilarious. But if you guys are just trolling me, no, Kash Patel.
Which is that the higher end consumers, they're being more selective, but they're still spending. It's lower income consumers where they're doing less. And that's entirely consistent with what we see when you break down retail sales by income cohort.
And you're okay. I mean, is that enough? That combination, is that enough to keep this going?
Well, look, there are two things that really drive equity markets. You've got earnings and interest rates. We just talked about earnings.
Right.
Interest rates are the next piece. And we see softness in the labor market. It's one of the things, in addition to inflation, that's really weighing on lower income consumers.
Yeah, and that pendulum is swinging, right? For a while, you had all the hawks on the Fed saying inflation, inflation, inflation. I think in the last week, the pendulum is back to jobs. In fact, at one point today, we were almost 83% rate cut using the CME funds. So you see rate cuts coming as well. Have you modeled out between now and the end of next year where Fed funds may end up?
Well, look, we think you get another 25 basis points before the end of this year.
December.
So we agree with this higher probability. And then there's probably between another 3 and 4 cuts by the end of next year. So between 75 and 100 basis points more. So you could look at the lower end of Fed funds as getting close to about 2.5%.
Let's talk about your target for next year, because you've got a pretty aggressive target. What are you looking for the S&P?
Well, at the upper end of our forecast, we're expecting 7,400. And that's because we expect earnings to expand by another 14% or so over the course of the next 12 months.
What's the multiple on that?
So you're looking at, 21, 22 times. Tech is obviously higher, the rest of the S&P catching up.
So let's talk about that, because you still say AI, the AI boom is still going to be a significant economic and market force next year.
Yes. And so what we really want to see is not only the increased spending in the tech companies, but also broader proliferation across the market. So whether that's seeing proof cases in terms of energy, biotech, and so on. So how you can actually deploy AI within individual companies. But think more broadly, right?
Okay.
Because it's AI adjacent. It's not all about tech. It's about industrials. It's about energy. You think about reshoring. You think about electricity supply. It even extends to utilities, which, let's just say, they have not always been the most exciting of names, but you can look at some utilities because of the electricity demand. They're going to start yielding 7 or 8%. That starts to look pretty interesting.
No, the utilities are actually in a sweet spot because they have that traditional safe haven appeal, but now they're also part, to your point, of the AI umbrella or halo, which gets larger and larger and larger. So before I let you go, is there any kind of wild card out there that could potentially wreck all of this?
Well, look, I mean, the thing that we are watching very closely is the ROI that you get for all of this tech investment in AI. We've seen some very eye-watering spend numbers. That really has to translate to revenue, and that's what we're watching very closely.
Janae, thank you very much.
Thank you, Charles.
Ironically, that's a major
People are acting like they haven't used artificial intelligence before. Can you not just try to envision how these products are going to be used into the future? And the way that you potentially have used ChatGPT yourself to accelerate from spending, I don't know, a couple minutes making an email to a couple seconds, that's with your tiny brain. That's with my tiny brain. How are the companies that, are thinking about it with the highest paid 10x engineers are thinking about artificial intelligence? We're giving those same tools to the smartest minds. And people are going, yeah, but we think that the returns might not end up yielding adequate returns. What are you talking about? The internet was worse than AI. Ended up seeing unbelievable returns. Mobile, cloud. You don't think that artificial intelligence is going to yield the results or yield a return on this spend? Maybe not immediately, but come on now. It's just crazy to me. I think that the space for artificial intelligence is super exciting. It's honestly so good, it might end up making people lose jobs. So how can you go, oh, well, the returns might not be good, but also everyone might lose their job? How can you get both? If the returns aren't there, people aren't going to lose their jobs. It's just, and I'm not even making fun of that lady, but I mean, they're all, every analyst, everyone trying to figure this out is saying these blanket statements. And people say I'm too bearish or too bullish or not giving any concern to the fact that this might not happen. Yeah, because I think it's going to happen. I just don't see how it doesn't. And Every new advancement of this product leads to more and more use cases, leads to smarter, faster, cheaper replies. People are not talking about the just cheapness and token generation. Some people should start talking about the cost to serve these models now. It's just fallen off a cliff. We're talking about, 1/200th of the cost of what we've seen a couple of years ago. I think that that's very important. Tom Lee says ETH is probably going to 2,500. Time to crash again. Did he actually say that? Didn't he say that the bottom is going to be in for Bitcoin in the next 2 weeks or so, and that what's it called? That Bitcoin and ETH sort of trade in a similar ratio. I mean, that part is true, but I didn't hear him say that the 25. Oh, no, you're not wrong. You're actually not wrong. The DeMark indicators are saying that the ideal Ethereum floor is 2,500. That's where it came from, which could be true. Let's watch this really quick and see. This is Tom Lee on Ethereum.
Yeah, I think, in the near term, there is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter. Yeah, I think, all
right. I mean, it can happen. I'm fine with it. I just hope that in the long run that it comes back and comes back strong. Really quick, we talked a little bit about Perplexity. PayPal is saying agentic commerce is here. Not only is it here, if you end up using these instant commerce solutions on Perplexity via PayPal, that they will actually offer you between November 25th and December 1st, you'll receive 50% cash back up to $50, okay, whenever making their first purchase using PayPal within Perplexity. 50% cash back in order to get this, product started. Now, I wonder who flips the bill there. Like, it's PayPal in Perplexity. It's not a broad-ranged, multi-service, cost. This is only in Perplexity. I wonder if Perplexity is either flipping that bill or if they are flipping a percentage of that bill, if they're helping cover some of those costs. That could be quite interesting. Could show a use case for PayPal using some of these AI services. Klarna also launched a stablecoin. Can you talk about that? Yeah, Klarna USD is looking to be launched on Tempo, which is Stripe's and Paradigm's platform that they came together to create. Tempo, which is not on Ethereum. That does look to be a thing. We'll see how it actually ends up going, but that's news as of today. So there's nothing really that we have to go on other than it doesn't look to be on Ethereum or Solana or any of these things. It looks to be on a brand new L1 that was designed for stablecoins. But yeah, Klarna ended up posting this on their website. Klarna launches Klarna USD as stablecoin transactions hit 27 trillion annually. Klarna, the global digital bank and flexible payment provider, has launched Klarna USD, its first stablecoin, in a significant shift for the company whose CEO was once vocal crypto skeptic. The move comes as McKinsey estimates stablecoin transactions now top $27 trillion a year and could overtake legacy payment networks before the decade is out. And could what? When did this report come out? I didn't read this. And could overtake legacy payment networks before the decade is out. Wow. But I did read this part. This move, Klarna makes the first bank to launch a stablecoin on Tempo, a new independent blockchain started by Stripe and Paradigm that's purpose-built for payments, with cross-border payments generating an estimated of $120 billion in transaction fees annually. Klarna sees stablecoins as a way to dramatically reduce costs for both consumers and merchants. Yeah. If Tempo picks up a lot of speed and they end up getting large and like really big customers and they're not using Ethereum, that is a bear case for BMNR. Okay, without a doubt. If there is a better use case for Tempo than Ethereum, and I think that is the one issue. I talked about this with Chris yesterday. You know, Visa, MasterCard, Stripe, these companies have dominated payments for a long time. If they understand this space and have the network effects to come in and say, hey, we're going to create our own L1s and we're going to go to the merchants that we already know very well, and we're going to sell them on our blockchain because we know the intricacies of payments. I do think that that's important. What's going to be easier? The blockchain experts trying to learn payments or the payment experts trying to learn blockchain? That is important to figure out. I don't have the answer, but Klarna selecting Tempo is definitely interesting. It is. Okay. Tanner, are you wearing 3 toupees? It's on there. I think I just ripped some of my hair out, though. Yeah. Okay. Okay, now where let's see if I've already missed the Mark Newton train or not. I have not been watching as closely as I should have. He seems to keep moving the goalposts further. Tom Lee? Yeah, it is interesting, right? It was 10 to 12,000, which seemed really aggressive. But yeah. I know you're fintech heavy, but would you consider adding MasterCard or Visa if they incorporated stablecoin? Well, they have definitely incorporated stablecoins. They're heavily thinking about it. I don't know. I think the older I get, I definitely like those businesses more, but still have not made a decision on either of those names just yet. Okay. It was end of year before. Now it's end of January. Is it 7,000? Yeah, it's true. I mean, the market doesn't mean that like, oh, a price target incorporates everything that we've ever seen. That incorporates, hey, what have we seen lately? You know, if this keeps up, then this is what we're going to see. It's not like you're reading a crystal ball. It's like, oh, no matter what, this is the end goal. Like things have changed. You know? So I think that's really important. Yeah. Okay. Let's see what else is here. It's going to be a shorter day today. I'm going to see if there's any news that needs to be covered. And then if there's not, we could take a look at markets and then we'll go. Let's see.
Who's the Fed governor now? Kevin Warsh. We got 2 Kevins. So you're Kevin 1, Kevin 2, whatever, alphabetical order, former Fed governor. Could also be a surprise candidate, but Kevin Hassett, maybe the leading candidate right now, could get that announcement prior or at the meeting from the president. All right, coming up, why this mystery sector is hopping even as the data around it.
Nah. Okay. I guess I'm saying such a filler word for me. QQQ is down 0.18%, or sorry, up 0.18%, and the SPY up 0.6. Jonathan Price for Visa in the community fund, $21. Doesn't just want me to have 20. Thank you, John. Appreciate that. Let me screenshot that. I'll throw that in the community fund. It's very generous of you, my friend. Tanner, do you like Norm Macdonald? I love Norm Macdonald. He's a legend of stand-up comedy. That's another thing that people might not know about me. One of my big hobbies in life is stand-up comedy. Huge fan of all stand-up comedy, essentially. So Norm Macdonald is a big fan. Big fan. All right. No, I don't do stand-up. I like watching all stand-up. And like I truly do mean all of it. Like I've never heard you be funny. I don't do open mics or anything along those lines. But yeah. Do you like Russell Peters? I liked Russell Peters. I wouldn't say I've watched any of his stuff in 10 years. But yeah. I'm like really old school. I like all the Richard Pryor stuff, or like Eddie Murphy, or I don't know what else would be. I wasn't really into like super old stuff, but yeah, now I'm a big fan of like oh man, I'm blanking on some names. Let's think here. Jim Jeffries, I really like. Jim Norton. I don't know why I'm thinking of all the names of Jay. Let's see some. Yeah, Don Rickles I was never really into. George Carlin was really funny. Dave Chappelle, great. I never really cared for Andrew Dice Clay. I think it was a shtick. I didn't like it. Shane Gillis is amazing. Louis C.K., honestly, super funny. Yeah, it's much easier whenever I see a list. It's hard for me to think of names off the top of my head, but yeah. Theo Von's good on podcasts. I don't really like any of his stand-up specials. I don't find them that funny. Ricky Gervais' stand-up specials are really funny. Ralphie May is hilarious. All the old Ralphie May stuff is great. And what was the other? There was another really big guy around Ralphie May's time. What's his name? He had a Chinese buffet stand-up joke. Oh, someone please tell me what it was. Nate Bargatze, I've seen him live twice. Comedy is not dead at all. Comedy's, Chris D'Elia was funny until he started getting into other extracurricular activities, and then he kind of fell off the face of the earth. Yeah, I think there was Kevin Hart's funny. He actually just put out a special yesterday. I watched it, and it was really funny. I actually enjoyed it a lot. No, literally, I watch a lot of comedy. Let's see what else. Yeah, John Panette. That's who it was. Thank you so much. John Panette was the Chinese buffet. He was so good. Patrice O'Neill, super funny. Cat Williams, really funny. Some of those specials. Yeah, big fan of Jimmy Carr as well. I honestly, I love all stand-up. I watch it all. I think people would be surprised how well versed I watch a lot of that stuff. Will Sasso, I don't know. Some funny podcast moments, but nothing crazy in my opinion. Yeah. Okay. Let's check out the markets really quick, and then I'll leave you guys off. Meta once again hitting new highs on the day, 633. Airbnb 3.3%. Yeah. Nikki Glazer, she did really fun, or she was really funny on the roast of what's his name? Geez, I can't even think of the superstar that she was talking about, but I can name all the comedians there. Mitch Hedberg, yeah. Can you give us a sample? I don't do stand-up I really do not do stand-up comedy. I just Tom Brady, thank you. I don't do stand-up. I don't do open mics. I don't have a set. I just enjoy the art. And watch it constantly. I've seen probably hundreds of specials, and I just enjoy it a lot. I've probably seen everything Aziz Ansari has done, everything Bill Burr has done. I've seen Eddie Murphy's Delirious and Raw, and everything that Dave Chappelle has put out all the way back, the old stuff. Sebastian Maniscalco, I get it, but honestly, I find it's more like cultural jokes that is just like, I'm not quite the audience, but I have seen a lot of Sebastian Maniscalco's stuff. It's just not my favorite. Same thing with what's his name? I'm trying to think of his actual name. Gabriel Iglesias. I find that his stuff can be funny, but it's honestly like, I'm just not Hispanic. So all the jokes are around growing up in Hispanic culture and all these different things. It's like, I just can't even relate to half the jokes. George Carlin's really funny. Tim Dillon, the best ranter of all time. Yeah. I mean, my girlfriend enjoys Matt Rife's comedy. I don't follow a lot of Matt Rife, but yeah. I don't know what's old about Bo Burnham. I used to love what is it? Is it Make Me Happy? I don't remember the name of his things, but I've seen them all. And then he did the one in COVID where he's just sitting in his room, trying to be funny and stuck in a room. That whole thing, I didn't care about it, but yeah. Hannibal Buress is really funny. I like his stand-up specials. Not that's a little under the radar. I don't know if many people think about Hannibal Buress as a stand-up comedian. Definitely as an actor, but Hannibal Buress as a stand-up comedian is really funny. Not funny, Dane Cook. You're wrong. Vicious Cycle, is it Vicious Cycle or Vicious Circle? Might be Vicious Circle. Whenever that originally came out, was the funniest thing, man. He's gotten not funny, but that break and enter thing. Do you think they took the batteries out of the remote? I'm going to kick down their door. I'm going to steal their door, put up beads. That's so funny. Like that back then, that was hilarious. Ron White, so good. I didn't want to be drunk in the bar. I wanted to be drunk, or I wanted to be drunk in the bar. They threw me into public. He's great. Yeah, Vicious Circle was great. Doug Stanhope's funny. See this? I don't get behind. Brendan Schaub, simply the best. What are we talking about? He's, a sidekick at best. Kurt Metzger, I also don't get behind too much. I find he's a little Andrew Schultz very funny. Cat Williams very funny. Man, you guys are making me want to go. We talked about the Jensen replying to the Google TPUs thing. People are sort of on the fence about whether it was good to reply or not. I mean, yeah. Hey, Vlad Tenov's new AI startup Harmonic just secured an additional $120 million at essentially a $1.5 billion valuation. Look at this. This man has multiple billion-dollar startups. Actually, what do you call a CEO that's founded a $100 billion business and then an additional $1 billion business? That's like a unicorn of unicorns. Danny McBride. Does Danny McBride do stand-up comedy? I don't think I've ever seen his comedy. He does comedy movies. Joe Rogan's actual stand-up comedy is definitely different than his podcast. He can be funny, but Brendan Schaub's the best MMA fighter. Far from it, my friend. Far from it. Okay, let's see what else. A serial entrepreneur. I think he's a little bit more than that. Yeah. But McBride is a genius at writing comedy. I bet that's, yeah, I can see that. He's great. Robin Williams is the GOAT. But honestly, I grew up on movies before I saw much of his stand-up. So to me, Robin Williams is still like Good Will Hunting. Good Will Hunting, Jumanji. Like it's hard for me sometimes. Even that with Eddie Murphy. Like you go back and you look at these extremely young versions of like Eddie Murphy, and it's hard to disconnect from, you know, him playing in children's movie and being Donkey from Shrek and some of these stuff. Aladdin as the genie. Yeah. Okay. People are talking, is it time to buy Coca-Cola
It's
stock
the
here?
most drunk, or I think soda, or one of in the world. It's kind of the Nike of sodas, if you will, for lack of a better term. And I don't mean in terms of performance. I just mean in terms of name brand. Why doesn't Coca-Cola get more attention? Why doesn't it get more love? Why isn't Coca-Cola a stock that we and others talk about more than we do?
I think it comes down to the fact that it's just kind of plain vanilla. I mean, it's a great brand. It's great marketing strategy. They're the market leader in their segment. So it's just not sexy. It's not exciting to talk about Coca-Cola from that standpoint. But if you're looking for excitement in terms of just steady gains in your portfolio, Coca-Cola can deliver that.
Coca-Cola can deliver. It has delivered this year. By the way, is there a vanilla Coke? I think there is a vanilla Coke. Is there not?
I think there is. Yeah.
I think there is. So it's the double entendre is well taken. Chris Brigatti, SWBC. Chris, have a great Thanksgiving. Thank you very much.
Oh, sorry. I was muted. Yeah, okay. I'm going to get going. Ladies and gentlemen, thank you so much for watching. Yeah, I think I'm going to get a BM&R video out later today. That's sort of a name that needs a little bit more coverage from me. Now that you guys... someone in chat said that Eddie Murphy only did 2 stand-up specials, so it doesn't count. What are we talking about here? 2 stand-up specials, first of all, is perfectly fine. I think they should be judged on the quality of those stand-up specials, not the amount. I think people who are just pumping out stand-up specials, that's something else. But look to like Bobby Lee or something like this. Like, how many stand-up specials does he have? He's still funny. You know? Oh, sorry. No, you're so right. I apologize. Pablo Francisco was a funny one. I don't even know that name. I think. Also, here's some money for Timothy Cook. Nonprofits. Sorry, brother. I didn't mean to miss it. Even John didn't want you to miss it. He gave me $2 just so I wouldn't miss it. Dude, I apologize. We must have been listening to something, or I must have been going off on something like this. Bobby Lee was funny. Tanner, can you end the stream, please? There's something else starting. Okay. Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now. Oh my gosh, Joey Diaz. Very funny as well. Bye.